Good morning, COT data video for the 11th of December 2023. Now we saw a big surge in the Euro FX, huge surge there, and we're actually sitting at 152,000 contracts long from the net non-com, so they're going quite bullish. We have to remember we've got a whole heap of data this week. We've got CPI, we've got the ECB, and we've got the Fed, FOMC, and it's going to just be a complete roller coaster for the Euro FX and the dollar. Alright, so while you see this as being strong and this being kind of tepid and fairly, just going sideways, it's probably not that indicative what we're going to see this week. We're going to just see a lot of stocks being taken out, upper and lower, and it might even be that we're going to see a little bit of euro weakness. If you see the Dixie chart that I posted in Patreon, we're probably might pump up to resistance on the Dixie. Because of the uncertainty, and the yields are probably going to pump as well. So there's quite a bit of caveat there with this COT data, and we have to remember this is from Tuesday as well. Alright, so if we look at it in a vacuum, just look at the COT data on its own without any risk events this week, and know that it was from Tuesday. They have been buying the Euro FX. Okay, we're going to have some resistance up here, obviously, but it's just worth noting they've really gone quite long on the Euro. Okay. So I don't know what to expect this week. If you look at the COT data, we should see continuation on the euro strength. Perhaps we will. It's quite difficult to say. You're going to need to trade very carefully. Yen on, and we're just trading those lows. We are now off the low, minus 130,000 to minus 104,000. Just really bearish, isn't it? We had a development from the Bank of Japan. They're going to start thinking about ending their negative interest rate policy, and that's a huge deal for the yen. Right, so we might see this as being the bottom, possibly, long term. This is possibly going to be the bottom. Pending that they do go away from the negative interest rate policy, then this is possibly going to be a bottom here. So we might just have to break these lows, perhaps. Maybe there's like a stop run or something, I'm not sure, but this low here will be very interesting this time next week. We might break it. Fundamentally we shouldn't, because of that statement that came from UADA, so that should hold fundamentally, but we'll have to wait and see. Okay, Euro off, Aussie on. Aussie ticked up. Okay, 77 to 57. Oh, that's quite a big surge. If we continue like this, then we'll breach the zero line, and then we might get an AU buy, where we're going to get the crossover. But we're still very far away from crossing over. But if we continue at this rate, it's going to take probably about 2-3 months before we get the buy, before we get the crossover. See? So that's of note. So Aussie off, pound was really falling. Yeah, we felt really heavy. Remember we had that channel break up here. We made that lower high, lower low, and we really dumped. And of course, what's happening now is that we're pumped a bit. We might get the pound USD. We might get the buy if we get the crossover. So that's of note, and we'll have to be careful, because we had the buy there and we did okay on it. It actually did rally about 200 pips on the currency pair, and we really did fall when we had the crossover. So we've got a potential buy scenario coming up, but you will want to wait for the crossover. You can snag some nice profits using this crossover. Just got to be careful. That might be a good one, so we'll have to keep an eye on that next week. Pound off, CAD on. CAD's kind of like in free fall. Oil was falling heavily, so that's not really too much of a surprise. We are trying to stop the free fall, and we've come from minus 63 to minus 57, but this is possibly fundamentally falling due to the price of oil, and we really are quite heavily dumping on WTI. So that's okay, I suppose. That kind of makes fundamental sense that we're falling there. So I'm not sure about the pound USD. You'd want to be careful. Obviously, if we're going to continue pumping on risk, then the pound USD is going to be a good long. Looking at the risk on, risk off correlation. So if we continue to pump and we're going to go to all-time high and we're going to continue higher, GU is going to be a good trade, and especially if we get the crossover. CAD off, gold on. I put something out on Discord this morning about gold, so make sure you check that. It's about the open interest, and what happened is that we just saw a big flush of retail positions last week, so much that 50% of them had to leave the casino, either through loss or they took profit. It's possibly they got out at a loss because that's retail traders. You know, they're more commonly going to get out at a loss, aren't they, than take profit. But just to say, the open interest has halved in a single week, so it's been a big flush. Okay, so yeah, we made it like a W here. So we potentially, you know, pending that we were below this, it might be quite a good sell, maybe. But we are ticking higher, 200,000 to 203,000. So they have increased their contract exposure to gold, and are definitely very positive, and have added more. But I wonder whether or not we're seeing like a W, maybe. I mean, we had a W here, but we just carried on higher anyway, so you probably can't really apply the harmonics to it. But yeah, I guess it's just more supply demand, isn't it? So there would have been like some resistance here, but we've overcome it. Might have to come up here. But we have got some heavy duty supply as well above, just technically speaking, so you've got to be careful about longs. And we are sitting at monthly pivot as well, and we've got the MVP, which is your median volume of positions, and that's sitting at 1999. So that's normally quite bullish if we're above, and we might want to come and get the stop loss cluster above, like I said in the Patreon video that I made yesterday. So possibly up to SLC, I think, to start the week, and then we're just going to go SLC to SLC, which is stop loss cluster. In case you don't know what I mean, it's the stop loss cluster indicator. So rate stops, and then we've got the CPI. And we're going to see a huge move, perhaps up, perhaps down. We don't really know for sure, but you just need to trade safely, and then you'll be okay. So it's gold off, and then we can look at Kiwi. Most likely just sideways, slightly negative. Yeah, just sideways. Not much to comment on there. It's just negative and just choppy. And then we can look at Swiss franc. So we've got a potential GU signal coming up next week, so we'll have to keep an eye on that. And yen is possibly going to bottom out here, and the dollar is just kind of just ticking sideways. We're positive, but it's just waiting, I suppose. It's almost like doing a snake, just waiting for the move, isn't it? So you think if we're going to start cutting rates next year, they might be forecasting some weakness in the USD, but it's just still stable. We're actually very stable. So perhaps the net non-comms, they're not really anticipating a cut anytime soon, because if they were, this would be ticking lower, right? So something to bear in mind. And Swiss franc is a sideways. So yeah, and don't forget, if you are subscribing to any package above the bulletin tier, this file is yours. You can use use it to your own devices. You can do whatever you want with it. Just don't share it outside. Keep it personal, because it's Christian's tool and has allowed us use of it. So if you use it, don't share it outside. It'd be much appreciated. And don't forget, you can change all your fields, filters, times. We've just got this static. We can go back further back in time, back to 1990 or beyond, and we can look at different permutations. We can also look at hedge fund sentiment. We can also look at what the commercials are doing as well. But just for the brevity of this video, we just look at the net non-comms, and these are the banks and institutions. So don't forget, you've got a 7-day free trial at Patreon, so have a look. And don't forget, you need to select the bulletin tier to get this file, and then you need to select the basic tier to unlock Discord, and then premium tier to unlock everything, including the spreadsheet. And I wish you a good day. I wholeheartedly recommend fxsi.com and their indicators for MetaTrader 4 and 5. It's a 7-day free trial, so do have a look. There's no credit card required. You might be lacking in some sentiment awareness, analysis, and it does complement technical and fundamentals very well. Especially if you're very technical, you could be missing out on some sentiment, or if you're particularly fundamental, you could be missing out on some sentiment. This is like a sweet zone. It complements both. and it gives you a very strong bias about direction as well. So technicals are great for direction, fundamentals are great for direction, but the sentiment sits in between. Okay, and so perhaps if you're missing out on some sentiment awareness, these are the best indicators in existence in the world for that. And then you can have a look at this. You've got a 7-day free trial, and you've got your order book, and you've got your indicators, including the ratios, which are amazing. Just look at my videos on my YouTube channel and you can see how powerful the ratios are. And you can have a look. Just take your time. You've got 7 days to trial them, and if you don't like them, then that's fair enough. You don't have to renew, but we do have a code if you want to, and it's just the Quasi DB code, and it gives you a 10% discount, and that's it. So have a look, see what you think. And like I said, it's a 7-day trial, so you don't have to renew, but I think you'll probably find you will renew afterwards, because the order book and the ratios and the stop loss clusters as well are amazing. The stop loss clusters are great because you know where to target. Okay, so that's where you take profit, where people get stopped out. Okay, and that's it. So just a quick plug for the fxsci.com, and enjoy your day.